Good morning, everybody. It is Tuesday. It is not only Tuesday, it is Tuesday, January 6th, Insurrection Anniversary Tuesday. It is 5:13 a.m. over there on the East Coast, and I've got a quick one for you because I don't want any misunderstandings about anything whatsoever as we progress into today and into our jobs data, which is going to be the September jobs data that we never got because the government shutdown. So here we are with our futures. Our futures have already made our dips from yesterday's highs, from the overnight highs, from back here around 1 a.m. when the majority of you were already asleep. And where we have come down to is right to yesterday's lows on the ES, right down there at 69.32. That's the top of the weekend gap. So as I was sharing, if you're going to be short, you're going to need to watch this, and that's when you want to be taking profits, as you'll see over there. But we're at a pivot point to decide where the next move comes, and we'll try and do what we can do, best cover that. So I'll keep you here on the charts before I move on to the spreadsheet real quick, because here's your SPX off your lows over there on January 2, 68.24.31. Remember, we're only looking for 68.55. We got a little bit lower than that. And here's your bounce coming off of that. So this is a 2-day view with the weekend gap being here in red. And not only did we retrace 76.4 of the entire dip, but we came up and we made almost to the penny contact with that gap that's right up above 69.20, 69.29, and then we faded off yesterday just down to that 6900 level without coming down to the lows of the day where we opened up, which is down here right at 68. 68.98, 68.95, 68.98. And as you see here, you gapped above everybody, 20-day, 5-day, 10-day over the weekend. That's the easiest way to get through your moving averages, is to be able to gap up above them. On the dip, we came down to the 23.6 retracement, almost to the penny there at the end of the day yesterday. So where are we? Well, we're actually the same exact as we were yesterday, you just don't know it. Over here from a bigger, broader, wider view of things, nothing whatsoever has developed. Nothing has developed. We've come right back up to our top right there, 69.13.52, made a visit to it, said hello, and then we had a small retracement down to where we had been supporting for the better part of last week, right around that 68.90, 68.95 area. Come over onto your futures and you can see this pretty clearly. You had a very clean ABC to the downside, an A, a B, and then your 1, 2, 3, 4 ABC to the downside. 161.8 extension perfectly hit 68, 68, 66. We came down to 68, 66, 75. Our bounce to the upside as of Friday morning, 1, 2, 3. With this being the 4 overnight here, or is it an ABC, very much like this ABC, perfectly reaching up to the 161.8 extension, and again overnight right back to it and rejecting it? You don't know the answer to that, and you're not going to get a whole bunch of people lined up with banners holding your name up to go storm the SPX Capitol just because you disagree with what direction it's taking. Over here on your SPX, like we said going into this, we're oversold, we got a buy divergence. Well, we made it right up to that trend line that I had on the 4-hour, on the weekly, just up to, technically you can consider it overbought as we got to the RSI 80 at the highs yesterday, and then we faded off. So we don't have anything actionable when it comes to the RSI. Over on our 4-hour, we knew that we were again oversold. Got our bounce, did not get overbought, did not come even close to getting overbought. But as you can see, we're just in that slow fade period from a wider view. And here you have your VIX constantly continuing to move to the upside, almost identical to last year. So take it with whatever grain of salt you want to take it with, but I would not be getting long and getting into any kind of long bullish positions as we progress here and we head into earnings, regardless of what kind of baby oil Puff Daddy and Maduro are sharing in their fucking cell over in New York. Don't give a shit. Over here on your QQQ, which is your most important index of all, you had your gap up over the weekend, coming off the lows after coming down right to that 609, 610 area. Major move up to 620 to reject it, and a slow fade off back down, with now your 10 and 20 day being above where you closed, and your 50-day moving average being right there where the gap was gapped above over the weekend, being right down there at 616. So again, be very cautious about getting yourself into any kind of long positions. And here's your IWM right over there to the trigger to go get short again, having broken above that 251.69, touched into 252. Again, you're not going to see this sell off and head down into 230 tomorrow, but you are at your you're at your top. So credit spread up here, totally up to you for Friday, 40 DTE, for whichever date you decide to do. But for buying puts, I'd still stick with what the alert went out with a couple of weeks ago with the date that was set up on that alert. So I will leave you off with a quick view over on the spreadsheets and why. Why, again, just like I said yesterday, it's been a slow grind overnight. We've reached the upside resistance pivots. I pointed out to you at the open of futures on Sunday night. So no, I'm not doing a put credit spread. Absolutely not. I'd rather see the resistance of 68.85 fail and shop around for a call credit spread with some worthy credit. As you saw, we gapped above 68.85. We opened at 68.92. Our lows were essentially that right there, 68.91.56. So that makes this, the risk is real, and the riskiest risk is that 68.85 to get that move down, which is why I have the 68.95, 68.90s. The same thing is on for today. The same thing is on for today. Insurrection anniversary, January 6th. Your 68.95, 68.90 call credit spread is providing $3 credit as of now. This is the riskiest risk you can take if you are looking to trade on the SPX with a call credit spread. This is the greatest amount of risk you can take in order to get a sufficient amount of credit on it. Now, again, having seen 69.20, 69.20, 69.21, that's the reason why I share over there where, okay, 68.85, 68.80, we will encounter the 5-day, 10-day moving averages, the November pivot, all of that. If you want to wait for a Trump pump, bomba in Spanish, for those of you that don't know what that is, about how amazing Hassett is, which you never mentioned yesterday, 69.05, 69.25 is what you're hoping to see so that you can go into the other spread I shared with you, which yesterday paid off perfectly. Your 69.25, 69.20, there was $1. Then there was a little bit better than $1. Then it was almost nearly $2 as we peaked up there at 69.20.38, and they worked out to be full credit. So again, that is your safer risk, knowing that your gap is still up there at 69.29, and as you come over and you see, you had a 28-point range yesterday. You don't get these sub 30 ranges on a regular trading basis. These are typically the kind of ranges that you get before there is going to be a major move to the downside. So take that again with a major grain of salt about going to the upside and looking for anything long. That's pretty much what I've got to leave you with, other than, listen, I'll get over it on the weekend, but QQQ 470 is coming. Like it or not, QQQ 470 is coming. I'm not going to give you a date when it's going to come, but that's what's coming. And on your IWM, again, over here, how you closed plus 47% above your April lows, 2 plus 1% days in a row, greater than. your 2 green days in a row for the year. Your year begins at 247.63. Your month begins at 247.63. And you have had 8 consecutive green months in a row going into this January 2026. So any questions? Any questions that don't make any sense about what risk is, don't be afraid. Drop a message in the chat room.
I just got 3 things to say. God bless our troops. God bless America. And gentlemen,
don't fuck it up.